Got Jason Leibovitz calling in from the States, head of private wealth at Hashnote, been around the block with Bitcoin. He's done it, he's seen it. Tell us a bit about your history and the context of OG.
I graduated university in '08. Graduating in '08 meant the beginning of the great financial crisis. And then in 2013, I initially got involved in crypto. The concept was, okay, interesting. And
I think the main question that I have after hearing your story is like, has anything changed?
I would say, in short, believe it or not, I've been in the space for 11 years and not a lot has changed. We are so...
Blockmates Orange is sponsored by Core Network, the ultimate Bitcoin-powered EVM-compatible blockchain. Learn more about Core at blockmates.com.
Welcome back, everyone. Another episode of a Blockmates Orange. I've got Jason Leibovitz calling in from the States, head of private wealth at Hashnote, been around the block with Bitcoin since even before 2006. No, I'm just joking. He's been around. He's done it. He's seen it. Been great to connect with him and finally getting a chance to chat to him on the pod. Jason, welcome. It's an absolute pleasure to have you, and it's not often we get to speak to a true OG. Welcome.
Pleasure to be here. Thanks for having me. Yeah, it has been a long roller coaster of a ride since 2013 when I initially got involved in crypto. So, and today we're recording it with Bitcoin at new highs over 108K. Let's keep going.
Today's podcast is sponsored by Glyph. Glyph is a non-custodial decentralized exchange operating on the Core Network. As you know, we've spent a lot of time focusing on Bitcoin DeFi on this podcast, and essentially what Glyph is doing is replicating what Uniswap has done on Ethereum. So they are obviously dedicated in developing a sustainable and innovative DEX on top of Bitcoin, much like Uniswap, and just taking this whole Bitcoin narrative to the next level. So they've got a unique non-custodial approach which allows users to retain ownership of their Bitcoin while enjoying the benefits of a decentralized exchange experience. Their website is glyph.exchange, and you can go and trade a variety of assets there like BTC, USDT, USDC, and a lot more. Go check them out. Yeah, awesome.
Everyone's excited.
Yeah, market's cooking. Bitcoin's once again fulfilling all those promises that we made all those years ago. Let's kick it off. Let's kick it off with where you've been and what you're doing now. Tell us a bit about your history and the context of OG. The real OG.
Sure. So when I graduated university in '08, finance, Wall Street was my path. Unfortunately, if you recall, graduating in '08 meant the beginning of the great financial crisis, and Wall Street was a tumultuous place. Nonetheless, was a trader at a global macro relative value hedge fund, went to the sell side at TD Securities and was selling fixed income products to hedge funds. And then in 2013, I had a very interesting conversation with a client of mine who was a very, very smart guy. And we spoke one morning at probably 6:30 in the morning, as we typically would. And he said, I was out at an interesting dinner last night, and I was the dumbest one in the room. And that struck me because this guy was brilliant, really, and typically modest, clearly modest. But for him to say that, I was like, okay, go on. He said, everyone was talking about Bitcoin. I'd never heard of it before. I didn't understand it. It sounded interesting in theory. And what I think is about to happen, and this is Q3 of 2013, he said, what I think is about to happen is it's about to be introduced to Wall Street. And therefore, whatever it is, if it's an asset, I think it's probably going to go up in value. But I still don't quite understand what it is. But you should probably check it out if you're interested. So I was like, okay. I've never heard of it before either, but I'm going to start doing some digging. And in my free time, I started Googling everything I could about Bitcoin. There wasn't much on the web at the time, but I read the Bitcoin white paper multiple times. And finally, that light bulb went off for me as to the concept of what Bitcoin was trying to create and the problem it was trying to solve. And to me, the analogy I used way back in 2013 was, with emails, I remembered, we'd take photos and you can only send, I think it was 25 megabytes of attachments of photos per email. But you could attach photos, HD photos, to an email and send them wherever they needed to go instantly on the internet, for free. And you can attach videos and obviously text. And now you can attach money, I think, except the catch is that it's not dollars, it's a new money. The concept was, okay, interesting. I need to learn more about this. And one thing led to another. I kept reading. There were two companies that I was able to find at the time, Coinbase, where I was able to purchase my first Bitcoin, and BitGo, where I was able to custody in a web wallet my Bitcoin. And so I started doing that. I started buying Bitcoin in 2013. You know, whatever clicked was so interesting, you know, in hindsight, now that it's 2024, almost 2025, in the sense that I knew enough to buy it and get it off exchange and put it in custody where only I had the private keys. I don't know what it was. I guess it was the concept of self-custody was kind of the invention of Bitcoin. I mean, that is in essence Bitcoin and cryptocurrency in a nutshell is the ability to self-custody assets that have value, whether it's store value or currency. So that's what I started doing. And I started shouting from the rooftops to anyone that could hear me and was willing to listen about crypto, about Bitcoin. And this was a Wall Street trading floor, and everyone thought I was cuckoo. They thought I was espousing some, you know, Ponzi schemes. They kept saying, "Oh, have you ever heard of Liberty Reserve before?" And I was just like, "Listen, this is not Liberty Reserve. It's not centralized. There's no, you know, puppet masters pulling the strings here. This is a open source, decentralized protocol, and they've reinvented money. And I think this thing is going to take off." And sure enough, later that year, it spiked up from $200 to $1,200, and then back. And I was fully hooked at that point. I knew that I was leaving TradFi and I was going into the world of crypto. And so in 2014, I left TD Bank. I started a cryptocurrency hedge fund that actively managed a portfolio of digital currencies. One of the first institutional vehicles at the time. This is right after Mt. Gox imploded. This is during Silk Road getting shut down, the Bitcoin getting seized by the US government, and the US Marshal Service then auctioning off the Bitcoin, essentially laundering the Bitcoin, because this was illicitly used crypto for terrible purposes, you know, across the dark web, that were now taken by the Marshal Service and cleaned and auctioned off in a formal process to the highest bidder of accredited investors and institutions. So I found that very interesting. And so our fund had four different strategies. We had an arbitrage strategy. Basically, we were trading cross-exchange, cross-cryptocurrency, cross-fiat currency. So Bitcoin dollar, Bitcoin yen, Bitcoin euro, and Bitcoin Litecoin, Ripple. Essentially, there were a lot of arbitrage opportunities in the sense that because the fiat rails into crypto exchanges were so new and slow, you could buy Bitcoin on one exchange for $400 and sell it on another for $450. So as long as you had accounts and credit at each exchange, you could just do that all day long, and it's risk-free. So we would do that. We had a fundamental event-driven positioning, which was long-short. We had a basket of long digital currencies. Our thesis at the time was there's more than just Bitcoin. We should be long a basket with a monthly rebalance. And then our final strategy was we would make markets. We would make OTC markets for various counterparties that were looking to trade off exchange. So it was interesting times. Bitcoin had just come off the 1,200 peak, was trading around $600, $500, $400 at the time. And it was pretty volatile, relatively speaking. But these were early days. As my career progressed, I ended up joining Credit Suisse as all the big banks started to build out blockchain technology adoption strategies. And I co-founded Credit Suisse's Blockchain Center of Competency, they called it. We sat in global markets IT. We were blockchain. We sat next to AI, machine learning, robotics, big data, cloud. We were blockchain. The whole concept of what we were doing and all of our peers in those other innovation realms were doing was trying to reduce inefficiencies at the bank, trying to expedite settlement times, trying to automate as much as possible. And our tool, our only tool, was blockchain. They called it distributed ledger technology, DLT, because technically these were white label, walled garden, closed private blockchains, not public open source blockchains, because we were a globally regulated bank and they were scared of the crypto world and the illicit activity that was possible. And so it was very much following the mantra of Jamie Dimon, where Bitcoin bad, blockchain good. And we piloted over a dozen different blockchain uh, projects and strategies at the bank to sort of try to disintermediate in various asset classes like cash equities, equity derivatives, foreign exchange was a big one, um, and tokenization and stable coins started to become interesting in the latter half of my tenure at Credit Suisse. I was with the bank from 2016 until 2020. And if you recall those 4 years in crypto and Bitcoin specifically, 2017, Bitcoin went from 1,000 to 20,000. And then 2018, 2019, that ICO bubble popped and Bitcoin went back down to 3,000. But what happened during that period, and being at a global bank, a Swiss bank with a lot of ultra high net worth clients, was it became more mainstream. Bitcoin, crypto in general, as an asset class. Everyone took notice. There were obviously Bloomberg, Wall Street Journal, FT, Economist articles all about crypto, all about Satoshi, all about, is this an asset class? Is it a bubble? What is it? Should you own it? And what happened at the bank was we started to get a lot of our very wealthy and VIP clients calling up their wealth managers saying, hey, this crypto thing, I think we need to own some of it. We have 50 million in assets with the bank. I think we'd like to put a 1% or 2% into crypto. What should we buy? Where do we buy? Which coins? What ratio? What breakdown? Who are the counterparties that we should be buying from? Where do you get the most efficient prices and liquidity? How do we lower our cost profile? And once you buy, what do you do with it? Where do you custody it? Do you self-custody? Do you third-party custody? Is there insurance? What happens if I get hit by a bus or if I pass away? How does the crypto get passed down to the heirs in my estate? Tax efficiencies, everything that you would generally ask of a wealth manager if you're, in that ultra high net worth and family office category, they started to ask to their wealth managers. Except the only problem was that this was a radical new wild west of an asset class. And these wealth managers were traditionally trained in capital markets and knew nothing about crypto, or not enough to expertly guide their clients. Plus the fact that they were told we don't give crypto investment advice because, remember, Jamie Dimon, Bitcoin bad, blockchain good. So what do? What they did was they said, you know what? I'm not your guy to talk about this. However, we have a blockchain team. So why don't I set up a conference call with Jason and his team in New York, and he can help you, go through all these questions, and I'm sure he can help you, figure it all out. So in 2018, this is after that peak and then subsequent crash, 2018 and 2019, I got no less than 70 or so of these conference calls set up by my colleagues around the world, in Asia and Europe and Americas, with these family office clients saying, hey, this is a very important client. I don't want to say no, but that being said, I don't know what to tell them. I don't know what the answers are, and I don't even know if we're allowed to give these answers. And they were right. We weren't allowed to give those answers, according to the chairman of the bank, who specifically reached out to my team, the chairman of Credit Suisse, saying, we do not give crypto investment advice. You can, broad strokes, high level, discuss, without giving investment advice, the topics that they want to talk about, because we don't want to shut them down, but we can't help them. And given the volume of interest and the realization that there was a need for this type of, call it high net worth, white glove concierge to help this type of clientele allocate into the crypto asset class, I realized that there was an opportunity, and Credit Suisse was not the place to make this happen. So I left the bank in January of 2020, right before the COVID lockdown, and started my own company, which was exactly a white glove crypto concierge to help high net worth individuals allocate to the crypto asset class. It was structured as a consulting firm. We weren't a broker dealer, we weren't an RIA, and we didn't give investment advice per se. What we did was we handheld these clients through the whole process of setting up OTC liquidity, prime brokerage liquidity for spot crypto and derivatives, if that's what they wanted, and setting up custody, whether they wanted self-custody or third-party custody, and then making sure that their entire cybersecurity footprint was clean and polished. They weren't emailing themselves the private keys and their passwords to their digital asset accounts. Because, mind you, these were mainly baby boomers, the patriarchs of these wealthy families that were on these calls, asking these questions, trying to get involved, and really wanted to be present. Typically they might have their associates and those that they hire in the family office do a lot of the asset class allocation for them. However, there was this novel interest in crypto and understanding it, where the patriarchs themselves, those that made the fortune or managed the fortune in these families, that they wanted to get involved and they wanted to get their hands a little bit dirty and learn and understand this asset class. And so I was talking directly with them, and they would have, baby boomer like tendencies of emailing themselves passwords, which was a no-no in crypto, obviously. So we would help them through the whole process. One of our core tenets in building this business was to mitigate counterparty credit risk. And we did that by setting them up with OTC liquidity, where all their transactions and trades were post-trade settle, meaning they did not have to pre-fund their accounts by wiring money to some crypto startup, essentially, before they even did a trade. They would get onboarded, they would do their KYC, AML verification, they would do it themselves, we would handhold them through the whole process in a bilateral nature, have their own family office account, onboarded with the OTC liquidity provider, so that when they were ready to pull the trigger to do a trade, they could lock it in. They could say, hey, offer $5 million in Bitcoin or whatever it was, lock the price in, and then when they hung up, then go and settle, then go wire the money, and same day get the Bitcoin into their wallet, wherever their wallet was, whether it was self-custody or third-party custody. And that was a key aspect to early days. This is 2020, 2021. This was the pandemic-led bull market. That was a key aspect in the last cycle to, reducing counterparty credit risk. A lot of people were burned with keeping money on exchange, having their crypto lent out to crypto startups that were rehypothecating their money, 10 times over with insane amounts of leverage. And when the whole system, blew up, when the market crashed, they received these margin calls that were, out of nowhere, essentially. And there was a lot of liquidation credit busts in the previous cycle of 2022, 2023. So by only having a couple hours of credit risk, meaning you send the wire first, you do have to send the wire first, but within an hour or less, or a couple hours, depending on time of day, you get your crypto into your wallet. That was the best way you could come up with in terms of reducing your counterparty credit risk. And so business did really well. I had a lot of clients from Credit Suisse. We caught this 2020 and 2021 bull market. There was immediate gratification for this type of clientele who was starting to invest in crypto for the very first time. And that day or that night or the next day, it was up 10% or 15% because the market was going absolutely bananas. A lot of referrals, everyone was happy. This was mostly achieving spot long allocations to crypto. And it was mainly like an 80-20 Bitcoin ETH mix was what I would say the average allocation was. Fast forward, obviously basically a lot of things led to the end of 2022. Three Arrows, Voyager, Celsius, BlockFi, Gemini, Earn, Genesis, and FTX. And then 2023, Operation Choke Point 2.5 or 3.0, whatever you want to call it, where in 1 week, Silvergate, Signature, and Silicon Valley banks were shut down by the US regulators. Dark times. And everyone was scared. That being said, very, very few people actually sold out of fear. They all knew that it was a volatile asset and that they were in it for the long term, that this was a long-term buy and hold, that this was a small allocation. It was kind of a nest egg and, pass it to the next generation, decades from now. So very few people actually were scared and sold. And they held on, and obviously they continue to hold, and they've done well. But I met Leo Mizuharo, CEO of Hashnote, in the end of 2023. I shared my story, my vision for sort of private wealth and working with this high net worth family office community, and that's exactly what he wanted to build at Hashnote. And so he hired me, and I built out private wealth services at Hashnote, which was essentially everything I've described, except Hashnote is an on-chain asset manager structured as a series of funds with individual strategy sleeves in each fund. And the private wealth tier was really, plain vanilla, geared towards this type of clientele: long spot Bitcoin, long spot ETH, staking your ETH, which was new, for this type of clientele who are used to just buy and hold. An index basket, CoinDesk 20 is our partner, CoinDesk Indices, and we built out the CoinDesk 20 index with them, where clients can allocate to the top 20 cryptocurrencies by market cap weighted, where Hashnote actively manages that index basket for these clients, so they can get the long tail of altcoins in addition to their main Bitcoin, ETH, Solana, Ripple holdings. And now what's super interesting, and kind of the reason I'm here to talk to you, is Bitcoin DeFi and Bitcoin staking. And one of the, when we analyze the Bitcoin DeFi space, one of the core tenets that I hold near and dear, given my history and the fact that I kind of am a Bitcoin maxi, truth be told, is never risk your Bitcoin principal. Don't lend it out for 3%. Don't give it to some crypto startup for non-compensatory amount of yield for the amount of counterparty credit risk that you're underwriting. If you're going to stake, you need to be able to hold your private keys. And Core DAO enables that. It's non-custodial staking. Core dual staking is really interesting. And there's a lot of interesting things about Core that excites Hashnote, and the reason that Hashnote partnered with Core to bring that version of Bitcoin staking to our investors is because we hold the Bitcoin for you. It's not being given out to some protocol where there's slashing risks, because God forbid you should get your Bitcoin slashed for something that you have no control over and you don't even understand, quite frankly. It's maybe with some crazy altcoins, you'll give them out to some protocol and you'll be willing to risk it all. But with Bitcoin, you really have to be careful and meticulous. And it is the gold standard of crypto. And so to be able to do non-custodial staking, and the way it works is you receive Core tokens as that's what the yield is paid in. And then you can stake the Core token. Well, the beauty of Core is that Core has a 95% correlation to Bitcoin. So it's essentially a levered beta exposure to the Bitcoin asset class. So you don't really need to sell Core because it correlates to Bitcoin so well. But that being said, if you don't want Core, if you don't want new token risks, you could sell your Core liquidly and put it back into your Bitcoin stake and keep staking it that way. So you have a lot of different optionality in these 4 tiers, tier 0, 1, 2, 3, which are different levels of the amount of Core that you would dual stake alongside your Bitcoin in order to achieve the APY, the yields that you're trying to target. And Hashnote will manage that entire stake tiering of the stake for investors. So we're fascinated by it, and we love this concept of Bitcoin DeFi, non-custodial Bitcoin DeFi.
Yeah, I mean, that's, the thing is, Jason, that you've definitely made my job extremely difficult today, because you've spoken on probably 154 different topics that I wish I could kind of interrogate. And essentially what happens is that this podcast turns into a 6-hour podcast, which obviously isn't the most wise thing to do, because we'll lose probably most people. But fascinating kind of journey that you've obviously taken, and it's really cool to hear you speak about most importantly topics that I think from a crypto native perspective, namely from my perspective, is quite almost foreign in this idea that we had that that traditional finance and the ideas around Bitcoin were very exclusive to kind of more like a fringe society, or even like a degen society of individuals. But clearly that isn't the case. Clearly the wise ones amongst our communities were already on it. They weren't wealthy for no reason. Clearly they had their eyes on the right things and they were asking the right questions, even if, we are dismissive of boomers and we kind of like, well, the boomers, and we kind of giggle. But the reality is that they were on it. They were on it quite early by the sounds of it. And you were already seeing the opportunity within the space. And I think the main question that I have after hearing your story is like, has anything changed besides obviously the regulatory and essentially those lanes being wide enough for these individuals to travel? Is it any different in terms of the kind of questions that are being asked now, or has it changed in light of, people just saying, okay, well, that meme, take my money? What exactly is kind of like different compared to where it was back then to where we are right now?
So a few things on that. I would say, in short, believe it or not, I've been in the space for 11 years and not a lot has changed. We are so early. I can't believe it. If you asked me in 2013, 14, 15, where would we be 10 years from now? I would have thought light years ahead of where we are in terms of adoption, not necessarily in terms of price. Price is pretty good. Maybe I would have maybe I recall myself giving like a 200K price prediction 10 years forward from 2015, but nonetheless, we're just so early. I mean, here I say this to my peers and friends and family all the time when they ask, should I buy, or is like $100, $6,000, $7,000, $8,000 Bitcoin? It sounds too frothy. It sounds too high. And I say to them, listen, in your bubble, in your network, when you're out at a dinner or at a party, it's holiday season, so everyone's going to be going to holiday parties for the next couple of weeks. You look around the room and you ask yourself, how many of these people have a meaningful, like a couple percent of their portfolio is allocated to the crypto asset class, whether it's the ETFs or VC or whatever it might be, or spot? How many of them? The answer still is so few, like 1 in 50, 2% of people. And that to me is just so telling of where we are in the super cycle, in the decades long adoption curve of crypto as an asset class. And you and I were here on a crypto podcast, and we both believe that crypto is this booming asset class that will be allocated globally in the coming years. But we're still not. The adoption is so few, and there's a long way to go up the adoption curve. And given Bitcoin specifically is scarce supply, fixed supply, and all this murmuring about strategic reserves for governments and corporates allocating balance sheets, meaningful amounts of their balance sheet, following the MicroStrategy and Tesla playbooks into Bitcoin, and every other institution under the sun, that Michael Saylor has laid out the exact playbook, step by step. He's in his Nashville, I think it was in his Nashville Bitcoin conference speech, he gave it step by step. If you're a charity, if you're an endowment, if you're a publicly traded company, if you're a government, if you're a sovereign wealth fund, this is how you do it. And he broke it down. The playbook's out there. He's done it. His goal as a publicly traded company was to increase his share price of MSTR, which he's obviously done very successfully. He's levered up his company, and we can have another podcast one day arguing about the how insane it was.
Did you see his response when he was asked the question around, like, so everyone's saying that all you're doing is that you're levering up and it's a bit of a Ponzi. Did you hear what his response was?
What was it?
His response was, so all these developers in Manhattan, when their prices get reevaluated and they come in higher and the guys lever up to do more property development, does that sound like a Ponzi to you, or does that sound like economy to you?
Yeah, it's a growing economy.
Yeah,
it's good. And so, you ask me what's changed, what's different. Not a lot, other than price and mainstream media coverage, and the fact that a president of the United States has appointed a crypto czar and has talked about a Bitcoin strategic reserve and supports Cynthia Lummis, who has the bill for the Bitcoin strategic reserve, and has Elon Musk and Vivek Ramaswamy in his ear, who are both crypto bulls, and has a vice president who owns spot Bitcoin in a personal wallet somewhere. Besides that, nothing's changed. So everything and nothing at the same time. Everything in the sense that the regulatory environment is about to get as favorable as it's ever been for crypto and crypto adoption and crypto's growth as an asset class, but nothing in terms of adoption, actual adoption. And I think that may change very, very quickly. I also think that the Bitcoin life cycle, the 4-year cycle, is about to change.
Yeah.
It's been slowly adopted since its birth in 2009. And we've had this very consistent 4-year cycle, essentially 3-year bull markets, 1 year, 80% bear market, 3-year bull market, and so on and so forth, all centered around the halving. That being said, if history repeats itself, which it rarely does, but it, as they like to say, it often rhymes, Q3 of 2025 technically would be the peak of this cycle before something like an 80% drawdown, meaning October-ish of next year will be the peak, whatever price that is, and then subtract 80% from that, and that will be the low about 1 year after that, October 26th, and that'll base, and then we'll go back up. I don't think that's going to happen, given the fact that this new administration in the US is not even in office yet, and that they're just going to be getting started in January and throughout 2025 and 2026 before the midterm elections. I think that Bitcoin and crypto is going to see a roaring bull market that's going to shun the concept of the 4-year cycle, because this administration has 2 years until the midterms, 4 years for the entire administration to play out and to sort of overhaul a lot of the inefficiencies, especially with the Doge, Department of Government Efficiency. And I think Bitcoin is going to be one of the big beneficiaries of this administration in terms of an asset class and an allocation. And if there is a Bitcoin Bitcoin strategic reserve in the US government, then, oh my God, like the price of Bitcoin is going to be much higher, and it's going to create an arms race, not an arms race, but similar to an arms race, it's going to create a race amongst major economies to allocate to Bitcoin, because it's going to be the new thing that they hold next to their gold bars in Fort Knox, essentially the private keys of their Bitcoin, to bolster their ability to print fiat and to spend. And so that concept of the 4-year cycle, I think, has changed and will be changed. Hasn't been proven yet, but that's my theory, that we're entering a new paradigm, a new regime in Bitcoin's life cycle, starting this year and continuing for the next potentially 4 years.
Seeing as though we're in a room with two bulls, I'd like to add some fuel to that fire, and I think it comes down to the gold ETF and just looking at that chart when it was listed. And essentially the whole idea of a Bitcoin super cycle could easily be attributed to the same trend that the gold cycle has seen. So there's no reason to think that couldn't happen. It's more than likely will happen if we are looking at markets and how they rhyme. So I think you're right. I agree with you, but there are two bulls in this room. So yeah.
Yeah. Bit of an echo chamber, but I agree that the gold ETF chart and history is somewhat of a potential indicator of what we may be experiencing and what we may see over the coming years, given that the Bitcoin ETF was launched not even a year ago.
Tell me, are you not concerned from the government side of things that because they essentially have unlimited fiat currency, that they could essentially buy a tremendous amount of Bitcoin, which kind of like tips the scales from like a decentralized owned asset to more of a centralized owned asset? What are your thoughts around that?
No, I think that it's a double-edged sword. Satoshi, whoever that was, or group of people were, may have had this libertarian anarchist nature, this distrust of governments and banks. I mean, the Bitcoin white paper was written during the 2008 great financial crisis at the beginning, and Bitcoin was launched in 2009 as Lehman and Bear were blowing up and the whole world was going to shit. And people with life savings in checking and savings accounts at banks that they trusted were losing all of that or some of that because the banks were greedy and not, taking care of their, life and their reserve and their nest egg. That was a massive problem. However, the double-edged sword is the fact that you've created this thing that, as Satoshi said, in case it catches on, you might want to own some. Well, it caught on, and everyone's starting to say, maybe we should own some. And the governments have taken notice, and they're saying, maybe we should own some. And when that happens, it becomes this globally adopted asset class. And once it's an asset class that is going to be allocated in a traditional portfolio alongside equities, fixed income, real estate, commodities, collectibles, private equity, VC, crypto, then it's regulated, it's taxed, and there's no stopping anyone from being able to own it and being able to buy it. That's part of the nature of crypto. And so when governments buy it, it's just a stamp of legitimacy. It's proof that this is a durable asset class with longevity, that it's here to stay, that it's not a bubble. Generally, when governments allocate to something, they're not going to sell it. They're not day trading it. They're not going to sell it anytime soon. Germany made the grave mistake of selling, I don't know what it was, 50,000 Bitcoin at
50,000.
Whatever. At 50,000. Well, I don't know. I forget what the number of Bitcoin was. Maybe it was more than 50,000 coin, but at about 50,000 price because maybe they needed the money or they didn't believe in it or whatever it was. But it's something that I think is quickly being realized that you don't want to sell. And all they're going to do is pump our backs. The governments. They're gonna buy up a scarce asset and drive the price higher. Maybe given the still limited amount of adoption that we've seen in Bitcoin, this price is pricing in a hype and future adoption. Hard to tell, but it's really difficult to ascertain where it's going to go over what time frame. Everyone throws out predictions of 200, 250K in 2025 Bitcoin, maybe higher if the U.S. announces a Bitcoin strategic reserve, maybe lower. I don't know. I'm convinced. I have a lot of conviction that over years to come, it's going to be much higher than it is today. And there will be drawdowns, there will be flushes, there will be leverage that will get, that will get wiped out. That's part of every capital market cycle. Just lots of leverage, and then that leverage has to get flushed out and margin calls and big sell-offs. But it's an asset. It's going to become a traditional asset class. And I guess the last thing I'd add to that is kids these days are growing up in a digital only world. I mean, you see kids know how to use iPads and iPhones and smartphones from the age of 1 and 2 and 3, and everything to them is internet native and digital native. The concept of gold as a heavy metal store of value, I think, is going to be a foreign, antiquated concept. Like, my ancestors believed in gold, but I don't. Besides jewelry, what is gold? You need a digital form of gold, and I think Bitcoin may be that. And so, as those generations grow up, the next generation grows up into becoming CEOs of companies and into politics and to government. I think there will be the mental hurdles of wrapping your head around what is Bitcoin, what's the value, what's fair value, should we own it? I think that those hurdles will disappear, and it will be ingrained into this new generation of kids in 10, 20 years time that crypto is just like equities and fixed income and everything else. It's an asset class.
So just coming back to kind of like the core of your business right now at Hashnote, are you guys using clients' assets and making and coming up with kind of like um, strategies around those assets, whether they ETH, Bitcoin, whatever the case might be, and then putting those assets to work? What does kind of like the framework of your business look like beyond just, pitching the idea of buying Bitcoin? What does that look like?
Yeah. So the way we are structured, we're not a 2 and 20 fund. We're an asset manager. And what that means is clients, investors invest into Hashnote because we have a menu of 20 different products, 20 different investment strategies that they can choose from. And we walk them through the entire menu and find them, exactly what they're looking for. And if it's not on the menu, we'll build it and we'll add a 21st product. And so they may subscribe in kind with Bitcoin they already have. They may wire in fiat. They may send in USDC to get the exposure that they want through Hashnote that they might not be able to get anywhere else. And that might be Bitcoin yield. It could be through digital options vaults, like selling covered call spreads on a long Bitcoin position has been very popular. Essentially getting yield on your crypto without risking principal with capped downside. Miners sell covered calls, outright covered calls. Those with Bitcoin who want yield, we're not lending. Everyone learned their lesson from 2022 with BlockFi and the others. DeFi, non-custodial DeFi, like we talked about with Core, or wrapping your Bitcoin custody with Hashnote or with our custody partners, create a wrapped version of that Bitcoin on the Ethereum network, EVM compatible, and be able to generate yield on the wrapped version of your Bitcoin while your Bitcoin stays safe in custody. Those are different options. Those are each different products that we walk our clients through. And if they're looking for yield, we give them every option, every menu item that we have, and try to find the right fit. We try to maintain a balance of secure custody with liquidity, meaning no, quarterly or annual lockups. We're not a fund like that. We try to keep everything as liquid as possible so that if you need to sell out of your position, you can do so if you need to raise cash or whatever it might be, or you want to switch into some other strategy.
Amazing. We spoke about it for so long. I mean, you were obviously in the trenches doing it from the early years, but it's great to, get that perspective and understand, I think in many ways, like where this is going on a global or on a massive scale. And I agree with you. I think it is just a kind of like this point where there is no return. It's kind of like it's not going to zero. People are seeing the value, and especially when governments are getting involved, and it's like, well, if they're doing it, then there's something right about this thing, which we know there is. How does this now play out into, a potential super cycle for banks particularly? Is it kind of like a point where banks now need to come and do the same thing? Because they, in many ways, you could argue that they've kind of like they're avoiding it. It's almost like, I know in the UK, for example, there's hard core rules that, some banks just don't accept crypto. And how does that look for them? Are they just basically going to become, null and void with time, or do you think they'll land up joining the party eventually?
No, Trump hasn't even taken office yet. Gensler is still the head of the SEC. From a US-centric perspective, the banks have not been allowed to touch spot crypto. They want to because their clients want them to, but they just can't, or they're scared of getting fines or compliance-related issues. All of that has essentially been worked out outside of the banking system in terms of how to audit the blockchain, using companies like Chainalysis, how to make sure that you have proper KYC and AML verifications on your clients' crypto assets, where to get regulated liquidity, Coinbase and Anchorage and all these other regulated liquidity providers, qualified custody, all of it exists, except the banks haven't touched it yet because they haven't been allowed to. And the Biden administration has been not pro crypto, to say the least. Trump takes office in January 20th of 2025, so almost a month. And we got a new SEC chairman who's pro crypto. We have all these others in the administration that are either pro crypto or not anti crypto. And you're going to see, I think, very quickly a regulatory regime shift that will enable the banks to responsibly and safely allow their clients to touch spot crypto assets. Meaning, instead of going to a crypto startup to buy Bitcoin and custody it, you can go to Goldman Sachs Private Wealth and say, hey, allocate some of my portfolio the way that Credit Suisse wanted to be able to facilitate but couldn't. When a client says, hey, I have 50 million assets with you and I'd like you to put 2% into Bitcoin and 0.5% into ETH and maybe stake the Bitcoin, at some point in the future, I think in the next 4 years, the banks themselves will be able to do that either themselves or with a direct partnership with a crypto specialist company like a Hashnote, or maybe a bank buys a Hashnote to integrate all of the services that we provide and the way that we work into their existing infrastructure, just to make it easier than building from zero. Sort of acquire a company and start leveraging their infrastructure to make it as quick and seamless as possible for the investors and clients of the bank to get ASAP spot liquidity that they want. I think it happens relatively quickly from a US perspective. I don't know what's going to happen in Europe. I feel like they're a little bit behind and they don't share a lot of the values that the Trump administration is bringing into the US. They're probably more in line in general, my opinion, with like the Biden administration, which isn't as pro crypto. So, US is going to be a leader in crypto, in my opinion.
Yeah, it looks like it. It's so weird because a year ago it looked like it was going to be the exact opposite. In fact, it was. And I mean, we were even saying, I said it many times on podcasts and on Twitter that it was like, if you're a builder and you're building in DeFi, particularly in the crypto space, why would you be in the US right now? You're basically at risk. You're basically at risk of going to jail. You're basically at risk of, losing your bank accounts, which we obviously saw and we've heard recently that a lot of people had. And it's amazing how quickly that's changed, like in a space of...
It really is. I have a lot of friends in the crypto space. I know a lot of crypto companies that uprooted and moved them offshore for that exact reason. They're in Bermuda, they're in Dubai, they're in Gibraltar, they're in, places in Puerto Rico and different, the Caymans, countries that are not the US for the exact reason. And I think that they're all going to be allowed to patriate back into the US and continue building what they were building and then some. And it'll be great. It'll be a boom time for the US crypto economy and I think the US economy in general.
Yes, please. We need that. It's
Totally.
No matter where you are, what you believe, that's what we need. It's a no-brainer, and it's great. It's great to see that we've had this turn of events. I'm sure you guys must be absolutely thrilled, and especially
we couldn't have asked for, from a crypto perspective,
No.
selfishly speaking, we couldn't have asked for a better outcome, politics aside, from the general election in the US. A Republican sweep that's just ushering in just a pro crypto everything. That was a dream scenario, and here we are, well over 100K in December before year end. Wild how the market has really turned and is embracing this new administration. So, it's been it's been good so far, and the party has not even begun. We're just still celebrating the victory. This market is celebrating the election, other than and hyping in, pricing in some hype and potential future appointments and regime changes and regulatory changes that we all anticipate in Trump's sort of message. But you know, a lot of people will believe it when they see it, and you know, it sort of feels like sky's the limit. There's just this new energy in the U.S. There's this renewed spirit of optimism with the U.S. economy, with crypto, and it's just a booming industry. It was in 2021 when crypto was good and the pandemic. You know, there were vaccines and you know everything seemed to be great. Bitcoin peaked at 69K in November of 2021. Everyone was feeling good, but that quickly changed. And you're seeing more of that renewed spirit where everyone wants to build and grow and create adoption and solve real world problems using blockchain rails. And I don't think it's going to end anytime soon. It's not going to end, in my opinion, nearly as quickly as it did in that 2020 in that previous cycle. So I think we're going to have a good 4 years, you know, barring any unforeseen events and black swan, you know, 5 sigma events that are always possible in this, you know, tumultuous planet and world that we live in. But you know, you can't factor those into your predictions. They're always possible.
When you guys sit down, like as a business, what are the strategies that you guys look at, you know, in terms of getting wider reach in the market? I mean, every company wants to grow. Every company wants to kind of like be doing BD 24/7. How do you guys approach that? Is it a case of, I mean, obviously relationships and using those from the past to get in front of people, but what does adoption look like from, you know, your perspective in terms of onboarding more people and institutions?
Yeah, it's an important conversation that we have on a regular basis, and it's basically analyzing and reanalyzing and reanalyzing the adoption curve, where we are right now, where we think we're going to be in a month, a quarter, a year, 2 years, 4 years from now. We keep looking at that, and who are going to be the first adopters and second and third. We think that a lot of the untapped communities are in the RIA space, so the registered investment advisors in the US. The most they could touch is probably the Bitcoin and ETFs. They can't get yield. They can't get any Bitcoin DeFi types of yield or staking yield. They can't touch anything outside of those 2 ETFs in terms of spot, and that's not even spot. So with this regulatory regime shift, we think that that community is going to be able to bridge into the crypto economy through some sort of SMA with a custodial partnership agreement, allowing the clients of large swaths of RIAs across all the banks and all the boutiques to touch spot crypto however they want it in any type of partnership that we can create. So we're going after them. IRAs, the retirement funds.
Okay.
They're if they're involved in crypto, it's in the ETFs. Again, if you do some sort of SMA with the custodial partnership agreement with the IRA community, not the 401ks as much, but the Roths and the IRAs, then they can be able to touch spot crypto and potentially access Bitcoin, DeFi, and other crypto DeFi yields in a non-custodial way, keeping their crypto at a qualified custodian at all times. So that's a community. And so we sort of just keep climbing up the ladder of those potentially untapped segments. And, the numbers are hundreds of billions of dollars of assets that are untapped in just those 2 buckets. And banks are next. And, you just keep going up the ladder. And that's how we approach it. And then it's, getting the relationships and the conversations and pitching them and selling them and figuring out what's best for them and how to make it work from a rev share perspective. All that is sort of the secret sauce in our business and how we get new adoption and new investors in our fund. But that's how we approach the conversations.
Yeah, I had a question here. What does Bitcoin adoption look like for you, like in the next 5 to 10 years? But I think you've answered that question already. I mean, it's like there really is. I mean, I think, the sky's the limit. That saying doesn't do it any justice. But I mean, it is a case of, I mean, it really is wide open. This is kind of the start of a new asset class, and with that, the possibilities seem to be endless.
I mean, BlackRock put out an official statement suggesting that 2% is the allocation that everyone should have in Bitcoin and crypto. That in your net worth or your investable net worth, that 2% of that portfolio should be in crypto. BlackRock, a multi-trillion-dollar AUM company with the two largest crypto ETFs, spot ETFs, saying that is a powerful signal. None of this happens quickly. It takes time. You have to get the infrastructure in place, and the relationships and the liquidity providers and the custody. But that's the indicator, 2%. And if you apply that 2% number to any type of portfolio, RIAs, IRAs, wealth management clients, I mean, we're talking about hundreds of billions of dollars that'll flow into crypto in the coming years. What is Bitcoin right now? It's about 2 trillion market cap.
Yep.
That number is going to hit 3 trillion and 4 trillion and 5 trillion in the coming years. I mean, it could be quickly, it could be less than, the next trillion could happen in the next couple months. So I think that that's the adoption that you're going to see is traditional portfolios allocating some fixed percentage into crypto. And you're going to see their monthly or quarterly rebalances of those flows. If Bitcoin outperforms, they may want to get back down to 2%. So there'll be the month-end selling, as there are with traditional asset classes. In this equity fixed income bucket, you always see month-end reallocation back into the percentage weightings that they want for their portfolio, for their clients. You might start seeing that, these predictable monthly month-end flows in crypto, buying more on a down month and selling on an up month, just to get back to the 2% bogey or whatever the percentage target portfolio weight might be. So at that point, it becomes more of a traditional asset class, and everything that we've been talking about and everything I'm seeing is going in the direction of crypto as a traditional portfolio asset class allocation. And the question is how it shapes out and when it shapes out. And I think the when is the next 4 years, that we lay down the foundation, the infrastructure for over the next 4 years with this US-centric administration that's pro-crypto. And then the how is through qualified custody, through spot liquidity, crypto prime brokerage, I think is a huge piece that we haven't even talked about much yet. Something that I've been trying to build since I launched my company in 2020, before I joined Hashnote, which was facilitating traditional prime brokerage for those high net worth family office institutional clients, meaning post-trade settlement of all their trades. You don't have to pre-fund your trading activity. They know your high net worth. They know your source of funds. You keep your assets wherever you want. When you want to buy, you can call up, lock in a price, and wire and sell the trade after the fact. The prime brokerage offers custody, spot liquidity, derivatives liquidity, lending, meaning being able to access cash from your long position, get a relatively safe loan from your Goldman Sachs Private Wealth or whoever the prime broker is, like a 50% LTV or 60% LTV loan with certain terms, a couple hundred basis points over SOFR rate, where you can access cash, borrow against your long spot crypto or long crypto portfolio, so that you don't have to sell and have a big taxable gain that you have to pay. So in a tax efficient way, access liquidity. Your prime broker will facilitate that, and they'll give you DeFi yield optionality as well. I think all of that exists under the crypto prime broker, and I think that whoever builds that regulated, licensed, liquid crypto prime broker with positive associated brand name identity, whether it's a Goldman or a Coinbase or an Anchorage or a Hidden Road, or any of the other big banks, they're going to be a huge winner. They're going to attract a lot of people because it'll be a one-stop shop for all of your crypto liquidity and trading and allocation and all of those needs. And that's huge. And I think whoever builds that first is going to be a big winner.
Yeah, there's a bit of alpha in that. Yeah, thanks for sharing that. I mean, that is very interesting. In terms of where we go from here, I mean, it's kind of like, is it a case of more ETFs in the space, more products, or are you guys not really looking at that side of things? Is it just about Bitcoin, or is it also, like the question would be when Solana beat ETF? Because it seems like that would be the next thing on the menu. What does that look like in terms of what's happening in the space right now?
Yeah, I mean, from my personal perspective, the ETFs, I don't think Solana ETF really solves a lot of problems. I think an index basket is probably a more likely ETF, like the CoinDesk 20 or the Coinbase 50. It's a tough index to actively manage.
Yeah.
But the manager, I'm sure, will charge enough in management fees to be compensated for the amount of work that would require. But what that will give you is an ETF access to the long tail of altcoins in addition to the majors, which people probably want in a single allocation. Right now, you can do that with Hashnote via our CoinDesk 20. It's a single allocation. You wire us, whatever you want to put into it, and we will buy 30% Bitcoin, 20% ETH, 19% Ripple, 18% Solana and down. And every quarter we'll manage that back to the weightings. We'll reconstitute it based on new additions and deletions from the basket based on each quarter. And we'll rebalance the weightings back to the proper weightings. It's pain-free from the client's perspective. You just now have spot exposure to the long. And right now you're doing it with Hashnote directly as a fund. Doing that with an ETF would be pretty easy as well. A Solana ETF, you could make the argument for a Ripple ETF. I just don't think that there's you may as well do it. And I'm sure that there are applications out for both of them, or at least one of them. But in terms of the need, I think those would be relatively small. Everything will pale in comparison to the gold ETF, silver or copper, nickel ETF. They'll be small. They'll sort of solve specific purposes. I just don't think that I think people would rather have an index basket. Like at that point, wouldn't you rather have a single ETF that has Bitcoin, ETH, Sol, Ripple, and everything else that you want in it, as opposed to have to buy 4 or 5 or 6 or 7 or 8 ETFs? It's just my opinion. And so, I think that a staked ETH ETF is an interesting thing to talk about. Getting yield, an ETF with yield, maybe down the line a Bitcoin staked ETF. Not sure what that would look like yet. We obviously love core, but that remains to be seen. It's the Bitcoin DeFi is still very new. But getting yield, having some yields on those ETFs could be interesting. No leverage, just what do you do with the spot asset that you buy in the ETF? Well, you stake it, and that stake, or you wrap it, and that kicks off a yield, and the manager of the ETF then manages the yield, collects it, puts it back into the ETF, and pays dividends, or somehow pays the holder of these long spot ETFs some percentage of that yield that they accrue. I think that would be pretty cool.
I agree. We've reached the top of the hour. Thank you, Jason. It's been fascinating to speak to you. Bitcoin Maxi and a raging bull. It's great to meet a fellow bull and Bitcoin Maxi. I am also a bit of a Bitcoin Maxi. You wouldn't think so, but I hold the values true to my heart, and I think we're in for a very interesting, 2025. It's going to be insane, actually. And I look forward to seeing what you guys do. Also with Core, I know that you guys have been busy there and been putting stuff together, and it's been really cool to firstly connect with you through the Core team. It's been an absolute pleasure, and I can only wish you guys all the best. And yeah, keep on fighting the good fight. And yeah, I'm sure we'll chat in the future. It's been really cool to get your perspective on things. Thank you.
Jerry, thank you so much for hosting me. I'd love to come back whenever you want me back on. And there's always some interesting stuff to talk about, especially when the new administration in the U.S. takes power and we see what happens. But it's been an absolute pleasure. The time flew. I can't even believe it's top of the hour. But you make it. You're very disarming. You make it very easy to chat and to get into some interesting topics.
Cool. Really appreciate it, and thank you for that. Yeah, take it easy. Thanks everyone for joining us. Please like, subscribe, share, leave your comments down below, and we'll see you guys next time. Take it easy.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions. Like and subscribe.